What's up, my future one percenters? This is the Trader Champ, Cam Jones, and this channel is brought to you by the TraderChamp app. It is where you can go and build a one-day fantasy portfolio and challenge traders from anywhere around the world in a one-day fantasy contest to see who has the best portfolio. You can either download the app in the Google Play App Store or the iOS App Store, or you can go to the website traderchamp.cash, sign up, and you can play there also. I want to start off by saying I'm not a professional trader, and everything I say on this channel is strictly my opinion. And I'm not telling you to do what I do, I'm just telling you what I'm doing. So, with that being said and out the way, let's get into the video. In the last video, the beginner stock trading video, I talked about a couple things like support and resistance, moving averages. I just want to touch on those things more in depth. I may not get to moving averages. It just depends on how long this video gets with support and resistance. So just a little bit about support and resistance. So basically, support, let's talk about support first. So what is it? It's a price level where the stock tends to stop falling and then it bounces back up. So you'll see when I show you on the chart. In the last video, I showed you guys how to change your chart to candlesticks. And there's a reason why I told you to do that. It's because it's easier for you to find out and to see like where clusters of candles are, and those clusters kind of determine where support is and where resistance is. Just an easier way for you to find it. Support and resistance is more of a technical thing. That's if some people, they're not really technical, they're more fundamental. So maybe this isn't for you, but support and resistance, it seems to work for me pretty good, and I'll show you how I use it. So let's go right into a chart. I'm going to be showing you Apple for support, and I think for resistance, I'm going to show you Pfizer for resistance because Pfizer kind of trades in a range. Apple, as of today, they just came down a little bit, but not below that support range. So you'll see what I'm talking about here. So let me get over to my Thinkorswim application. So here we are, and this is Apple. So remember what I said about support. You want to find these clusters of candlesticks, right? So let's just take a look right here. Now I'm on a 1 year day chart. Usually when I'm talking to you guys, 99% of the time, I'm going to be using a 1 year day chart. It's just what I like to use. So right here, you can see a cluster of candles. And so what this tells me is, this is where the price is kind of bouncing around at. Not really bouncing around, but this is where it's kind of like staying at. I want to probably try to get in at or a little bit below this level. So let's just call it, you don't have to be exact with the stock market. I don't have to find the exact price that, this is averaging at for my support. I can just see at the higher end of support, we'll just call it 232. The lower end of support, I'm going to call it 220. So about right here. And so we'll say support is at $220. You can see today, Apple dropped. They went all the way down to about 219, and then it came back up and closed around almost 223. Well, 222.50, we'll say. No, I have the exact price right here. I could just use the exact price. It closed at 222.64, but you can see it went all the way down to $219. We said, where did we say support was? We said support is around 220. It got down to 219, shot right back up. That's what support does. It gets down to a certain level where it's kind of like a safe area, and then you say, okay, it's too low. Every time it gets around this area, it goes back up. Let me buy it. And the same thing happened here, at least for today. It went down to 219, came back up, closed at 222. I would expect this to kind of slowly move back up. I would not expect it to go below the 200-day moving average, but if it does, that's probably a buying opportunity. Remember, in the last video, we talked about good stocks, good reputable stocks. When they get below the 200-day moving average, that's usually a buying signal, because these stocks, they're not going to stay below there for too long. If you just take a look at Apple here, it did go, if you look at like last February, March, it did go below that 200-day moving average, and it stayed there for about a month and a half, and then you see it shot back up. So you had a month and a half to accumulate at a really good price, somewhere around in between 175 and 164. And you can see now, today, as of today, it closed at 222. It went up as high as 260 a couple of weeks ago. So, but that is support right here, where you see a cluster of candles that are kind of close together, and the stock price is above those candles. Then the where the cluster of candles are, that's going to be your support. But the price has to be above it, because when it comes down, it has support there, so then it goes back up. That's really important to remember, now that we're about to go to learning what resistance is. So let me go to I think we said we're doing Pfizer for resistance, PFE. So this is Pfizer's chart, and I picked Pfizer because it's kind of easy for me to show you resistance, because it really doesn't go above $30, too much above $30. And right now it is below $30. So it's 26.64. So it's below the cluster. You can see this is a large cluster of candles right here. It's below it. So if it's below if the price is below the cluster of candles, that cluster of candles becomes resistance. Before, when I showed you Apple, it was above 220. So that 220 area where the cluster of candles were, that became support. And you see, just like I said on Apple, I think this is like the third time I'm saying it, but Apple went down today to 219 and then bounced right back up, because 220 is support, and it closed at 222 something. With Pfizer here, this cluster, and like I said before, you don't have to be exact. I'm looking at this cluster, even though it went up to a high a couple months ago, looks like August or July. The high was 31.54. The cluster of candles are staying around 30. This is around $30 right here. So it's not really going above 30. I mean, just look at the line. I'm not even going to move it. Nothing is going really above 30. So we can say $30 is resistance on Pfizer. So right now it's below it. So if you were to buy Pfizer right here, it's below the 200-day moving average. Maybe you're like, man, I see some upside on Pfizer to $30, right? So let's just call it a $4 swing right there. And they pay dividends, so you could get a little bit of money on that. You can say, well, I want to play this. I think this is a good price right here. So you get it at 26. Let's say it goes up to like $30.20 or something. At that point, you're above resistance. It can still go above it. There's nothing saying that, hey, this might go to 50. But what support and resistance does, it gives you time to make an educated guess on what you want to do with your stock. Do you want to sell it or buy it here? In this case, you may, to me, I would want to sell it around $30 because I'm seeing the chart tell me that it has a hard time staying above 30. So maybe at 30, maybe I try to push it a little bit. Maybe I try to get 31. But, I'm looking to sell it there because history is telling me that this isn't going to go too far above 30 unless, unless it has like a big breakout, and that could happen. But we're just using this to make an educated guess, and that is like really how you use support and resistance. Resistance is a price level where the stock tends to stop rising and pull back down, while support is a price level where the stock stops falling and goes back up. So you saw that with Apple today. Here you can see that just, when I showed you on the chart, just having the line right here at $30. I'm just trying to get real close. 30 right here, 30.02, whatever. But you can see at that line, every time it goes above 30, it comes right back down, with the exception of this time right here. It went to 31, but what happened? It came right back down. So that's how you can use support and resistance like this with not almost, with any stock. I'll just go to something else on Win. Now this is a semi-ugly chart right here. This thing just going down. Now it did pop back up, but now it's going right back down again. So I would probably say this one has resistance around, let's just say between 100 and 105. I'd say 105. If I were to buy this right here at 86.26, when it gets to around 100, between 100 and $105, I'm probably looking to get rid of this. I know it popped up to 110 here, but as you can see, that doesn't happen too often. Doesn't get above 100 too often. So there is it's starting to move up right here a little bit. It's sitting at that 20-day moving average, which I kind of like to see. I'm thinking, if I buy this here, I'm out of this at, 100, 105, or maybe I'm not out of it, but I'm reevaluating at between 100 and 105. I'm taking a look at this to see, do I want to protect my profit? Do I want to sell half? Do I want to sell a fourth of it? Do I want to sell all of it? That's how I'm using support and resistance, and also how I'm using the moving averages too. I like the 20-day prices tend to follow the 20-day moving average. So I'm looking to see how far above this price is it to the 20-day moving average. From what I see, just with my experience with stocks, when a stock gets too far above the 20-day moving average, it starts to move down. I think I mentioned that in the last video, the stock for beginners. And you can see it here with Win when it got up to that 110. This is the red line right here is the 20-day moving average. It's way above it. What it do? Came down. Right here, it got up to 108, way above it. Look at the 20-day. It's right here, way above it. Came back down. Let's check out this one right here, 108 again. Way above the 20-day, came down. So I'm just playing, or I will be looking at this to play it what it's been doing historically. And like I said, nothing's perfect in the stock market. This thing could go to 108 right here and then make another move to 120, and they resetting the board at that point. You may look a year down the line from there, support may be at 120 or 118 or something like that, because that's just how stocks move. They don't always stay down, they don't always stay up. They move and they go into different ranges, make new support, new resistance, things like that. So that is support and resistance, how to use moving averages. I think on the next video I want to talk about what is a cheap stock and what is a deal, because I think, and I mentioned this on the last video also, I think people always look at the stock price, and this is one that I don't like this one. But people might look at Lucid, be like, man, I got Lucid at $2.86, but you don't know that that's expensive. That's an expensive stock right here because of the market cap. Let's take a look at another one real quick. Zomedica. I can't stand this stock. 12 cents. Somebody be like, man, I just bought this for 12 cents. Blah, blah, blah. But you don't know, this is one of the most expensive stocks, like, on the market right now compared to what they do, and the market cap. They have a ton of shares outstanding. We'll get into it in the next video. I can go on a big rant about what is a deal and what's not. I think that's a mistake a lot of people make. They just don't know they don't truly know what they're buying. They don't know what's a deal and what's not. So all right, till next time, I will see y'all. Peace.